Our continuous coverage here from the World Economic Forum in Davos is on, and joining us now is the Chief Economist of the IMF, Geeta Gopinath, making her first appearance here at the World Economic Forum in her new capacity. Congratulations, Geeta, on your new appointment, and thanks very much for joining us on CNBC TV 18. You've just presented the World Economic Outlook, and it looks bleaker than it did in 2018. In order of priority, what would be the most significant risk facing the global economy today?
There are two major risks. One would be an escalation in trade tensions, and the other would be a worsening in financial conditions. Because relative to 2018, what we've seen is that the two have become intertwined. And so that poses major risks to the global economy.
You know, Christine Lagarde talked about this new multilateralism, but clearly at this point in time, global leaders like President Trump don't think much of multilateral institutions or multilateral frameworks. So what hope do you have of this new multilateral order to take off?
We need to have cooperation. We need multilateral institutions to address many of the issues that we're facing. In fact, one of the things we point out in our outlook is that one of the immediate actions that need to be taken is for countries to come together and resolve the trade differences and do that quickly. So that is a very important factor that we require for growth to continue in the global economy.
But do you feel confident of that, especially in light of the conversations and negotiations that are on between the US and China? One day it seems like it's moving forward, the other day it looks like it's status quo. What's your own sense of being able to break through on some of these crucial trade negotiations?
So compared to our October 2018 outlook, if anything, there's been an improvement in the trade sentiment. So the G20 meeting in Buenos Aires, which was a coming together of US-China, trying to work out their trade differences. So those are pluses. There is uncertainty, there's no doubt about it, and that will remain, but we have to resolve this as soon as possible.
Mm-hmm. Brexit, and that is one of your most immediate key concerns for global growth as well as the global economy. How much lower do you see the forecast trending if you don't see trade negotiations between US and China kicking off in the manner that we expect and the Brexit uncertainty were to continue?
Those are two very important risks. We already talked about US and China. In the case of Brexit, our forecasts for the UK to stay in the free trade area and the transition to be smooth. If that changes and there is a costly no-deal Brexit, then that can have very important consequences for UK and therefore for the world economy.
Mm-hmm. Let me ask you a few questions on India now. 7.3%, that is the outlook as far as India is concerned for 18-19, slightly higher for 19-20. What would you be watching out for when it comes to the Indian economy, the next few triggers?
Indian growth is high. We still say that it is the highest growth rate for a large economy, so that's a big positive. The other positive is actually we forecast growth going up in 2019. And that's because of two factors, the lower commodity prices, and the other one is that we expect, because of the low commodity prices, the weaker impact on inflation, that monetary policy would be more neutral and more accommodative. Mm-hmm. Those are pluses. But going forward, I think that the big challenges for the Indian economy would be job creation and would be reforms for the agricultural sector.
Mm-hmm. This business of doubling farm income by 2022, which is the aspiration that the government has, as you look at where things stand today, do you believe that that is realistic? And what would the policy imperatives be in order for us to be able to get there?
There is a tremendous amount of distress in the agricultural sector. I believe that farm loan waivers don't solve the problem on any kind of a permanent basis. We certainly need to insure our farmers against very volatile food prices, but we also need to work with giving them better technology, better seeds, better...
An income support scheme?
A cash transfer would absolutely be better than loan waivers. It would be more broad-based and would keep the incentives aligned.
A universal basic income, and this was an idea that Arvind Subramaniam had touted in his economic survey. We don't know whether the government will do it or not, but do you believe that's a good idea, that should be something the government should consider?
The universal basic income in its original form is unlikely to be implemented in any developing country because that implies giving money to every single citizen in the country, including the very richest. So, the question is about targeting the most vulnerable parts of society, and there are many schemes already in place that try to do that, and we just have to make sure that it is more effective.
Mm-hmm. I want to ask you about what you're seeing at the Reserve Bank of India. And the IMF did say that it was looking at the developments at the RBI very closely in light of Urjit Patel's resignation. There's now a capital framework committee that's been set up looking at the use of the RBI's capital reserves. How's the IMF looking at this issue?
We very strongly kind of call for operational independence of central banks. I mean, not just the RBI, but central banks all over the world. And that is very essential to maintain macroeconomic stability. There is nothing wrong in having a committee set up to discuss issues that are relevant both to the central bank and to the government. But when it comes to important decisions on the operational side, it has to be independent.
But what should be the guiding parameters as this committee looks at the issue of capital reserves and whether the government should be able to access them or not, to your mind?
The question is that does the Reserve Bank have enough reserves to maintain macro stability for the economy? Reserves can be quite fickle and they can change very quickly in a very short amount of time. So that has to be kept in mind.
There's a clamour in India for a repo as well as a CRR cut. The previous governor didn't believe that CRR cut was an adequate tool, especially when it comes to liquidity management. But what's your take given the global context and where things stand in India?
I mean, we do not prescribe very specific policy instruments for any country, and that would be up to the Reserve Bank of India to decide on that.
Have you had a conversation with Raghuram Rajan? He was the chief economist at the IMF as well, and of course you know him really well. Any words of advice that he may have given you, any conversation that the two of you have had?
Raghu has been a great friend and mentor for many years, and so yes, we've been talking and has always given me great advice.
Geeta, always a pleasure. Appreciate you joining us here on CNBC TV 18. Thanks very much for your time.
Thank you, Shireen.
Well, that's Geeta Gopinath, the chief economist at the IMF. For now, it's back to you.